AI is going to take a lot of jobs. Real estate will always be here. We will, as a species, we're going to need places to live. How education will, education got changed a little bit with COVID, remote education, so forth and so on. But there's still going to be schools. There's still going to be offices. We're still going to have, hotels and hospitality and apartments. Some people want houses and some people want apartments for lifestyle. Renters by choice or renters by necessity. It's going to be around for a while. I think it's a fascinating business. So I'm here to stay.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
And I have Sharif Shakhshir with me here in the studio. And the thing that I'm laughing about is I was just describing to him that in high school, you guys all know I have dyslexia, right? Anybody who's watched my show after a while, I have dyslexia. I failed Latin. I failed French. I failed Spanish. And Sharif was like, okay, just call me Joe.
You barely passed pronouncing my name correctly.
See, I'm barely passing your name. Okay, why don't you bottom line your history and say your name correctly so people know who you are?
Name is Sharif Shakhshir, born and raised in LA. Been around here for a while. Love this place, love this town. So a little about my history. Thank you, Christina, for having me. Yeah. Bachelors and masters in finance. Frankly, want to be in finance investing since I was 12. Literally started trading gold and silver. This would be like the late 70s. I'm aging myself when times of crazy inflation. Then I got into working for a stockbroker, learned about collecting assets under management, got my undergrad in finance, worked for banks, hedge funds, consulting companies. Fast forward to the early 2000s, I was working for Countrywide, their lending division, but not a loan officer, more on the capital market side, actually putting loans into mortgage-backed securities. Fun fact, we used to do about $1 billion of loans per day. Let that hit you. $1 billion of loans per day. Anyway, so I was involved, ironically, in the risk management side of the business. And I did my duty.
I was going to say, no, you did not do your duty.
I did my duty of advising the board that there were risks inherent in the business model. We did some subprime as a percentage of our total book of business, far less percentage of other lenders who really brought down the business. But it was just a matter of profits. There was a lot more profits in doing subprime loans, and that's where everybody was getting into it. And then, of course, you had Bernie Frank out there saying, "Oh, we need to improve, home affordability across the country." But that's a whole other story.
That is a good story. So then, I might ask you about that. Go ahead.
The proverbial something hit the fan.
Yes.
And basically, Countrywide could no longer fund their loans because the markets, seized up. B of A, I believe, pretty much had an encouragement, more likely a gun to their head.
More like a gun to their head.
To buy Countrywide and Merrill Lynch because of the contagion that could have resulted if there was not some financial stability. Anyway, so B of A bought us. Then I stuck around for a while because I knew where all the bodies were buried. I knew the details of the loan collateral that were in the residential mortgage-backed securities that then B of A now inherited, and more specifically the rep and warrant risk that led to billions of dollars worth of risks and losses that I and B of A we had to manage. Anyway, fast forward, I got laid off. There was a day when many thousands of people were laid off, and that included me. Yeah. B of A was shrinking the company over the ensuing years after the acquisition, and it was my turn, which then led me to get into commercial real estate. Okay. I didn't know an NOI from a rent roll from my elbow and that other periphery, spot on my body. But I ended up in a room in Westlake Village in a Hilton, Hyatt, whatever, listening to a presentation by a gentleman who was frankly just trying to raise money. He was trying to raise some money to go into a fund, to go into buying commercial real estate. I was intrigued. But again, I didn't know anything about the business or the business model. As it turned out, the gentleman happened to be a alum of Countrywide as well.
Okay.
I did my typical thing of being in the room and asking some questions and helping to elaborate, accentuate on his points. After his presentation was over, I said, perhaps we should work together. And he said, yeah, I think we've already begun. So his job was to raise like the $50,000, $100,000, $200,000 checks if he was lucky from, frankly, a bunch of silver-haired, retirees who were, dissatisfied with CD-like returns. And talking to me, he wanted me to do more of the institutional capital raise. He thought I had the education, the background, yada, yada, to go and hit the family office and institutional money guys to write, $5, $10, $20 million, check sizes. So I started working with them, and I didn't know anything about commercial real estate or investing, but I did know that it would be important to have documentation to share with these prospective investors on what we did and how we did it. That would constitute things like an investment policy statement, a track record. What does a buy box look like for what you wanted to buy? In short, the company bought all things commercial. That could have been a apartment. It could have been medical office building. It could have been adaptive reuse, retail, etc. They were all over the country, and they did not self-manage. So when I was trying to define the buy box, it was difficult. When I tried to then hunt down and build up a track record because they didn't have one, there were a lot of data points that were not immediately available. In short, I was there for like 6 months and had a heart to heart, and we all came to the conclusion that I was here, they were there in terms of readiness to answer the questions that would inevitably come from somebody writing a $10 million check. So we parted ways in good form, remaining good contact, whatever. In the course of my networking and so forth, I came across my current employer where I'm at right now, CALCAP Advisors. I was rather persistent in hunting down the CEO to have a meet and greet, informational interview that went very, very well. I'm good with numbers and analytics, and I can talk good game. So they hired me on, and they said, on a Monday morning, here's a pro forma, here's a spreadsheet. Like, okay, I'd heard of these things called pro forma, but literally at that point, I'd never even opened one up.
Right.
I got that in the morning on Monday, and they said, look at this, study this, raise your hand, ask some questions, get back to me by Friday. Let's have a discussion. By that afternoon, I said, okay, I'm ready. I, tore apart the spreadsheet and the different tabs and figured out like what calculation went from, one tab to that tab and this formula. And I fixed some things, and I showed about how it could have been, improved. And they're like, okay, good. Sharif, he can have the keys to the car. He can drive.
Good.
So at first I was in a passive, like recipient mode of deals that were coming in, the owners, the inboxes. Sharif, underwrite this deal from Phoenix, from Tucson, from Las Vegas. But I kept on underwriting like faster and faster and faster, so much so that it was like, okay, twiddling the thumbs. How about, I start reaching out to the brokers, making some more phone calls. How about I reach out to more brokers?
Right.
How about I
more deals coming in?
Put on my quant head and start looking at some other markets. So I started looking at a variety of different public and private data, public data from the government, Bureau of Labor Statistics, census, and a lot of information from, the brokerage community. What were they saying about the different markets that they had, deals, and what did they think about cap rates and so forth, and deal flow. So I put together this big journal spreadsheet, looking at 74 different MSAs. And, just yesterday, for instance, I did a presentation to the investor committee on which markets I thought we should invest in, which ones I thought we should divest in, but then also looking at, the macro, what happened with interest rates. The Fed just had their meeting. What happened to GDP that got announced just yesterday morning? What is my, forecast for, when, not if, we're going to have a recession, but then what does that look like in terms of us being multifamily investors? How are we going to buy stuff? How are we going to source stuff? Anyway, so I do macro work, I do strategy work, I do pro forma analysis and sourcing deals, and a few other things.
So why do you continue to choose real estate as a way to break through to your financial freedom? You could do anything. You could do stock, you could go back to Countrywide, you could continue to do what you're doing now. You could break out on your own. Why does real estate continue to hold you to use to break through?
For the longest time, I kind of felt like the Wizard of Oz, the guy behind the green curtain, in the sense that what I was doing was, pulling levers, or in my case, like in the capital market side of different, outfits I worked on, and fixed income and equity and derivatives and things like that. There's all this stuff like up in the air, up in the ether.
Yeah.
Not tactile. I'm always going to be an analytical person. That's just kind of how I'm wired.
Right.
But I'm also a very sensual, kind of a person. And professionally, what I was doing, like in my Countrywide days, B of A days, was really focusing on mortgage-backed securities. They still exist, but I'd done that for like 20 some odd years. And the thrill was gone. I didn't really want to go there anymore. And then I fell into real estate and I got this ability to analyze stuff, get on the phone and talk to brokers, get to know each other, build these relationships. And then, writing letters of intent, selling that letter of intent, going through best and final, going through the questionnaires, going through interviews, selling myself, selling my analytics, selling our company, selling our ability to close deals. We had the equity, we had the debt already lined up. We had a reputation that I worked very, very hard to, let that precede us. And then we would go out and tour properties, and we'd walk properties. I was kind of funny, but I would meet a broker, meet in the parking lot, shake hands, walk in the leasing office, shake hands with the community manager. Community manager would typically, stand up, shake hands, and start walking towards the door. Here's some leasing brochures, whatever. I'm like, whoa. Let's sit down. I want to get to know you. I want to get to know this property. What are the challenges? What are the opportunities? How do you approve tenants? What situations do you deny tenants? Do you have any bad debt? It's the 6th of the month. What are your collections? If I gave you a blank check for CapEx, how big would it be? And what would be your priorities? Do you have ROI on some recently renovated units? Do you have that kind of details that shows that you got a $200 bump in the rents? But how much did you spend? Do you spend $2,000? You spend, $10,000. If I can get all that kind of info, and then we'd start walking.
Right.
And everybody's always like kind of shocked, but I just enjoyed hearing it from these people and knowing what is going on, what the opportunities are. And sometimes those initial meetings / interviews were very, very disappointing. And sometimes those meetings and interviews were very, very encouraging. And sometimes when they were poor, then that told me that there was a great deal of management upside. Wouldn't necessarily turn me off on the property, may attract me even more so.
Right.
Sometimes that manager was great, running that car at red line. Okay, operations are probably going to be great. What other opportunities could I discover while I'm on site of this property today? Anyway, and then we start walking units. And then I would ask, could we have a maintenance guy or gal? come with us.
Mm-hmm.
How long has that maintenance person been there?
Mm-hmm.
Oh, we just hired them, 2 weeks ago, or they've been there for 10 years.
Right.
And again, those little details. I'm sorry, that's a really long answer about real estate, but I'm just sharing my passion.
You're sharing passion. Yeah, you're sharing. And what I'm hearing in your description, in your story, because it is what you launched into was a story. Like, I walk into the building and here's the feeling, here's the sense, here's the experience of it. What you're telling me is that what you don't have in the ethers is the experience. What you do have when you're in the physicality of the real estate, the process of acquiring and moving through and looking at all the I would say the documentation, but really the people, the experience of the person, the experience of the building. Then you pull all this documentation. Like there's this visual experience that then shows up. Just like
yes and no. It's actually, I would say, a little bit opposite.
Okay.
And that there's, of course, the desktop underwriting, right? You're talking to a broker, you get an OM, you get rent roll, financials, all kinds of other information you can get. You're doing the Google Earth satellite view.
Yep.
You're doing the Google Street View. I think we were talking about that the other day, like the virtue of Google Street View, lately. With that, I'm weird. I will do a street view all up and down around the block. I'll find the nearby, grocery store. I will find the nearby, high school on Google Street View. And if I can see the profile of the people around the area just by that street view, that tells me a great deal. Going back to the property, if I'm walking around the property with the community manager and or maintenance people, and when they lean over and pick up a trash or a cigarette butt or whatever, or they see something that needs to be maintained and they whip out their phone or they whip out a notepad and take note of it, again, it tells me so much about the property and how it's being operated. Then we go and start walking units. So my point is, first there's all the paperwork and stuff, then there's the people side of it, and then there's the property. There's the tactile part of seeing the property, seeing the unrenovated units, seeing the renovated units. I will always insist, show me some vacants. Of course, they've always got vacants. I said, no, I just don't want to see a rent-ready vacant. Have you had an eviction lately? Yes. Have you had a skip lately? Can we get into that unit? And they say, oh, but I haven't even been in there. I said, I've seen it all. I've seen it all. But for instance, I walked into a unit the other day, the on-site staff, disclaimer, I'm worried, Sharif. I'm like, I've seen it all. We go inside, and they said they have not even been inside themselves yet. They just found out it was a skip. And we walk in, and there was a little bit of trash, and this is a renovated unit, so we all expected the worst. It was clean. And clean in the sense of like no damage. And I walked to the maintenance guy, and he's like, this is no problem. I says, how long before you can get this to be rent ready? Yeah. It's like a week, a little bit longer than usual, but basically about a week. I'm like, great. Anyway, this is, I've learned this by doing. Yeah. I've learned this, from the people I've worked with, but I've just learned a lot by doing, like reading people and just kind of having some common sense. But I really do love real estate. So lastly, to answer your question, like why this? Yeah. AI, for instance, just a quick answer. AI is going to take a lot of jobs. Real estate will always be here. We will, as a species, we're going to need places to live. How education will, education got changed a little bit with COVID, remote education, so forth and so on. But there's still going to be schools. There's still going to be offices. We're still going to have, hotels and hospitality and apartments. Some people want houses and some people want apartments for lifestyle, renters by choice or, renters by necessity. It's going to be around for a while. I think it's a fascinating business. So I'm here to stay.
All right. That's lovely. So how do you feel like you've taken the time to contribute and grow the company you're in?
So like I said, I didn't know much, like literally an NOI, a T12, a rent roll, a cap rate. I didn't know what those terms meant. Now I can give a dissertation on them, especially cap rate. Oh my God. When a broker says the cap rate of something, like what? Define the numerator and denominator, which you mean by there. How did you get to that NOI? Exactly.
Well, how much did you include in the expenses to get to your net income, really?
Right. I can go into that, quite a bit.
So
what I contributed was
you started with not knowing anything, and yet now you've got keys to the kingdom. So, talk to me.
I took a pro forma model that was like 5 tabs. And if I should be proud or shy to say that the current pro forma is about 35 tabs. And that's what I call the classic one. Then there's the enhanced one, which is all GL level. It's GL level for all the revenue and expense items. Because then that goes directly into Yardi, and then it becomes the budget that the property management people have to manage each line item. Because then we have like a budget versus actual variance call every month. Anyway, so basically what I did was I built various different versions of the pro forma. I'm proud to say that we have like a funnel, and at the top of the funnel, say, is 100 properties that meet, say, vintage, geography, number of units, for instance. Out of 100, I have to analyze 99, actually 100, to buy one. I don't know what other people's like closure rate is,
right,
but I'm proud that it's 1 for 100, in the sense that when I'm speaking to investors who will sometimes ask about the acquisition fees, I'm like, well, you're not the one having to sweat it while walking the pavement in Vegas on a summer afternoon, wishing you jump in the swimming pool. We're doing that. I have to look at so many deals before we even close, one. So it behooved me to become very, very efficient at this. Everybody's got like a quick, back of the napkin, way of doing it. I came up with something called a quick cap rate calculator to look at the financials, and basically I can figure out a cap rate of what I think is a cap rate, on a deal in about 10 minutes. If it passes that, then it will go into a full underwrite. Again, all of us know that even that is something that is constantly being updated. Rent comps, there's one level of rent comps of just pulling up a property in CoStar. Another level of rent comps is when you're calling up the properties that are your comparables. A third level of comparables is when you're under contract, doing DD, going to those rent comps, talking to those other properties, seeing the renovations that they're doing, and having like the classic versus the renovated. I mean, just for instance, that's like one area of constantly refining the pro forma. Talking to my tax guy, talking to my insurance broker, figuring out the staff. Okay, I've interviewed the people. How many are going to be staying on with us? Okay, what is going to be the payroll cost and the bonuses and so forth on their old package versus the new package. It's like the pro forma is just constantly being updated until literally like a week after we close. Sometimes when things are all done. So what I'm getting at is that I think what I introduced was a whole lot of process, a whole lot of systems. We do a lot of stuff in like Google Sheets, but then also just a lot of shared networked environment to share information, just really emphasizing about efficiency and transparency.
Wow. So I think you bottom line that beautifully when you said that you added a lot of documentation and efficiency and being able to understand the due diligence. Because when you're saying I'm going to wrap my arms around 100 buildings, right, and I'm going to put them all through this design in order to get the one that we're looking for, and you went from 5 tabs to 35 tabs. I think that was right, 5 tabs to 35 tabs. I mean, you really are talking about what does it mean to use your strength, right? Your analytical brain, your capacity to see the system, your understanding of the depth of how to manage finances, to be able to say, we're going to take all of that and we're going to lay it right on top of the physicality of real estate. And I'm going to interview the people, and I'm going to get a sense for the staffing. I'm going to get a sense for the how many units. I'm going to get a sense for the rents, the local rents in the area, and you're going to really be able to get this incredibly deep picture that involves 35 tabs. And that sounds like that's what sort of the secret sauce is that you've brought to this company, which has made the company stronger.
Yeah. Yeah, I mean, the pro forma has all these tabs, again, for very, very detailed looks of all of our assumptions for revenue and expenses, very, very detailed look and analysis of all the historical data to better enable us to project, forward. And then a whole lot of like, what if, sensitivity analysis, what if the rent growth isn't what, CoStar and Yardi are forecasting? What if expenses, vary as well? What if the cap rate, on disposition isn't what we think it's going to be, and it's going to be significantly higher, not lower? These kind of things.
Perfect. So obviously you're in the multifamily market, and the company you're with is in the multifamily market. Right now, what's happening in your industry? What is it facing in the multifamily market? And that could be economics. It can be a trend-based. It's a loaded question right now in this day and age as to what I'm still asking the question generically. Right now, what is happening in your industry, and what is it facing?
Rates have been rising for over a year now. The Fed has been increasing rates, trying to slow down the economy and slow down inflation. Not only have they slowed down the economy, they have slowed deal flow. Seen some recent statistics from some different brokerage houses I'm dealing with, and like 75% lower transaction volume over the past 12 months versus the preceding 12 months. For a guy like me, who's eats and feasts based off of deal flow and deals that we close, it's a struggle. Okay. So again, like what happened? Whole lot of sponsors, like myself, had an opportunity in the past number of years, since COVID, to buy properties with 3% and 4% handle, interest rates on these deals. A lot of them were astute, judicious, and taking down fixed rate debt with a lot of IO, and took advantage of that in terms of that helping their cash on cash. Those same sponsors, listen to some of the other days, like those people now have an asset in the sense of this very, very attractive debt right now. Just like homeowners, it's the same situation. People trying to buy a house right now, there's very, very little inventory. Most sales transactions right now are in the new home side, not on the existing home side. People don't want to sell. Homeowners don't want to sell. Apartment owners don't want to sell. They got great, great debt. Anyway, so that's been a big, huge challenge. An opportunity is how there's been those other sponsors who got super, super aggressive and didn't buy something that was going to debt cover. They bought something that was going to qualify for agency debt. Mm-hmm. So they went to bridge loans. Mm-hmm. Bridge loans are, adjustable rate. Sometimes they got interest rate caps. Sometimes they did not. But those bridge loans are starting to come due. Those interest rate caps are, if they had them, are starting to expire. And I've been hearing, numbers such as, buying an interest rate cap back then, a couple of years ago, at X, and then having to replace it at a cost of like 20X.
Yeah.
So this is a person who's bought a property, and rents are what they are. NOI, is what it is. And let's just say it's growing at a nice clip. But if they had bridge debt that the rate went from 3% to 7 or 8%, that debt service just was overwhelming, and it like became unserviceable. So, that's an opportunity that I'm really, starting to look at, and making a lot of phone calls to um, the Arbors of the world, other bridge, debt providers, starting to talk to the brokerage community to find out if people are starting to do a lot of, BOVs for these bridge debt, lenders, for some banks, and also for, those owners who are just trying to figure out like how underwater they are, or not. Maybe they can still get out and still, get out maybe, clean, or get back a little bit of their equity, or maybe it's going to have to, turn it back over to the lender. So if I can find a broker who's writing those BOVs, that is an opportunity that maybe I can be first in line to buy it on a pocket listing.
Okay, sounds good. So tell me about how you're going to help your companies. You just did this, so tell me how you're going to help CalCap in this upcoming, I agree with you, recession. It's not an if, it's a when. How do you think you can help CalCap with that? And how do you think it would help you as your own, potentially building your own portfolio? Right?
My job is to do the day-to-day of finding deals, whether it be, on market or off market, but then also kind of have that, uh, look down the road, around the corner for, the
Yep.
risks and the opportunities that may present themselves. So it's fun. Like I'm looking at the details of the here and now, but also having to look, out in the future for where the risks and opportunities are.
Well, you just did an economic projection, right, for your company. Like you just presented that CalCap yesterday. So tell me a little bit about what's in that and how you recommended that CalCap implement what you were saying is in that.
The Fed is in that rock and a hard place of, all right, people are leaving.
It's okay.
Rock and a hard place, and that they are quasi-independent, but it's also an election year. They, I think, are beginning to acknowledge or admit that they were late to increasing rates. And they kept on saying, transitory and inflation and so forth. They were late, and we had inflation. Didn't acknowledge, all the economic stimulus, around COVID times was going to have such a huge inflationary effect on top of very, very low rates, historically
Very low rates, right?
Top
of demand disruption. So yes.
Right. So now, and all this stuff that I've looked at, like the level of inversion of the interest rate yield curve right now, you have to go back to the 80s where it's that inverted. There have been various other inversions, and we've all probably seen the data where every time there was an inversion, 6 to 18 months, thereafter, there was a recession of some amount of time or other. But this amount of inversion we're seeing right now is historic. So what I think is going to be happening is, 6 to 18 months, we are going to be looking at a recession with the numbers just of the past few days of a tame CPI at 3.1% and a relatively strong, GDP of let's say 2.4%, yesterday. I think Chairman Powell is still going to feel encouraged to increase rates again. I think 25 in September is highly probable.
Okay.
If we get some other inflation numbers, it could be a 50. I'm only saying that is a possibility because he still feels like he's in, catch-up mode. Anyway, so recession is likely. The big thing I'm just starting to think about, here internally, is not necessarily just the acquisition side, but I'm also very, very deeply involved with the asset management.
Right.
And part of my pay as well is, my pro forma projects, NOI of X. Part of my bonus structure is based off of whether or not my forecasted NOI is above or below. So now I'm starting to write up the game plan of how should we approve people when the economy starts to get soft? How should we, work with tenants that we have in the property already if things start to get, tough? Should we start to sell a lot more, sooner rather than later, if things start to get, ugly, and then replenish the capital in our own coffers, and make our investors, happy and confident that we know when to, pivot, but then pounce and in that time when multifamily should be a lot cheaper than it is right now.
Sounds great. Sounds like you're laying some groundwork and being able to have the company look forward and not be surprised. This, it's a given with the yield curve being, I loved your data because I'm a data person, right? I love the conversation. Well, the yield curve is more severely reversed than we've seen since the 80s. Of course, we know about the hyperinflation and the huge amount of interest, right? The interest rate that was increased in the 80s, and that, maybe the Fed was late, but we also just had a lot of money show up. And I think the Fed was probably encouraged to not respond sooner. I think that the Fed wasn't just twiddling their thumbs, being misinformed about the temporariness of the inflation. I think they were encouraged to not destabilize by counterbalancing all the inflow that was showing up from the the political side, you could call it that, from the presidential side, from the fiscal side, that they were showing up on that side. So I think the monetary policy was intentionally being pushed to stay as it was in order to allow for a huge amount of capital to flow through the system, in order to, quote unquote, stabilize us through COVID and to stabilize the rents and the economy. And then it's like, okay, guess what? We're here. Okay, now you guys can move forward. Now monetary policy can start making a big difference, right? I guess to try to counteract what was happening on the fiscal policy level. So I don't think it was unintentional. I think it was intentional, but I think it was a conversation that was having it be as it was. But now you're creating plans. You're like, hey, we it's very simple. Yield curve reversal, 80s, right? Now we've got too much money in the system. We know that it's not really that unpredictable, but we need to respond to it. We need to be prepared for it. And you're starting to come up with the plans and the policies and the procedures that will help the company do well in that movement. That's what I'm hearing.
Yeah, like one of the things I was looking at yesterday as well is, of course, we had the regional bank crisis of March, which for me is just dumbfounding how that was not foreseen. That with these increased interest rates, that these banks were going to have problems with some of their loans, and then deposit withdrawals, et cetera. Once again, aging myself, but once upon a time, you actually had to physically go into the bank to withdraw. You had to physically go into the bank to transfer money.
Yeah, so run on the bank was literally people running to the bank.
Right. Now you just do it on your phone, quickly transfer money, wire money, et cetera. So that all happened. But what I was looking at, the other day was the inevitability that banks are going to be suffering some losses. Banks are going to be knowing that they need to preserve their capital for internal reasons, but then also they are subject to regulatory, increased regulatory oversight, increased capital requirements because of losses that are happening now or losses the feds are anticipating to happen. So be that as it may, one of the stats I looked at was just the increase in number of banks that are increasing their lending standards, meaning they're going to be lending less.
Lending less. They're tightening the standards.
These loans are, a huge engine to support the economy. So if banks are lending less, that also increases the probability of running into a recession.
That's correct.
Another thing I was looking at was how incomes are going up, but debt service on the consumer level continues to go up. We've all heard a lot about how so many people did have a lot of COVID monies. That money's largely gone.
Yep.
So people are constrained. In my meeting the other day, I was actually proposing to the property management side of the house that one of the metrics I would like to start seeing is like their applicant flow. What are some of the trends in that applicant flow? If there's a dramatic reduction in the number of people who are approved, that's something we should start to look at in terms of the trends. If we start to see that there's more utilization of co-signers, something we should look at. If we're seeing just an overall decrease in credit scores of the applicant pool, that's telling us something that, and besides their ability to pay rent, those signatories on the leases are having some financial problems if in the aggregate their credit scores are starting to go down. So again, these are all like leading indicators that I like to look at.
Yeah, makes sense. All right, so you mentioned to me earlier that you were, not only do you work for this company, and it's great that you do, and that you've really developed your skill set in working for CalCap, but also you mentioned currently about, hey, maybe I'll start building a portfolio of my own and actually being an investor with the knowledge that you have. So tell me more about that.
Well, it's all thanks to you.
I'm to blame. Oh, I love this. Now I really want to hear this story.
So I'm a curious person, a lot of ways, but no, I'm an intellectual sponge, and I like real estate. I discovered Phoebe, and I forget, I met you 3, 4, 5 years ago now, and you are very. I mean, if I'm passionate, you're even more passionate. It's like
I'm pretty passionate. Yep.
I'm Spanish and you're Italian, or something like that. Red hot lovers.
I've been in Southern Italy, and I've seen how they talk in Southern Italy, and I'm not that bad.
But do what you love, right? And that makes you smile, and the money will follow.
Yeah.
Anyways, I became curious about this organization for investors, buy investors. Maybe I'll find my tribe. Maybe I'll find my people. Yeah. It's good to find people, because you and me and the people at Phoebe meetings, things we talk about. So what's your cap rate? That's not typical cocktail conversation for broad audiences. So to be able to have a professional conversation with people who actually understand and can engage in those nuanced esoteric topics is fun. It's kind of like a bit of self-validation, like to talk to somebody else. And like I'm saying it to you, it's like you put a big smile on your face, like, yeah, I know what you're talking about. Let's talk more about it.
Let's talk more about cap rates. Let's talk about gross rent multipliers. I was in a meeting last night, and they were talking about current gross rent multipliers in the South Bay cities. I'm like, no. South Bay cities gross rent multipliers, when I first started investing almost 20 years ago, it was blah, 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 blah. And I'm like, we're having a great time.
But in the course of, these meetings of, meeting with the first one and various other meetings, and the friends that I've now made through Phoebe, like I said, it's like my tribe. It's a bunch of people that now I speak to. Like I have pretty much scheduled at least like 3 calls a day with people that I have met either in person at Phoebe or through various webinars and so forth that I'm watching like all the time. I'm constantly sharpening the saw and constantly learning and networking. But yeah, I mean, I had 3 calls today before this one. It's a busy Friday. Talking to, new brokers and markets I haven't dealt with, different lending partners, a potential, co-GP that wants to work with me on, buying a property, for myself.
Yeah.
So
your own investing, you can develop your own. You can be a real estate professional and develop your own portfolio at the same time. There's no question that you can have a professionalism where you go, I am an expert in this and I work for this company. And by the way, I'm also an investor, and I buy my own buildings and I own my own buildings because I believe in real estate and I use it as a way of developing my own financial freedom.
And, so in the course of looking at properties, for instance, I really, really love the Midwest a lot right now. We just closed a property last month in Kansas City. We have 3 properties in Kansas City right now, 1 in, actually 2 in Little Rock, and I'm looking at some more. Like another one in Springfield. I also want to look at Indiana. I've been hearing some good things about that. But anyway, so in the course of looking at these areas, these MSAs, then of course I'm talking to brokers.
Mhm.
Then of course, if we're not already, self-managing in those areas, I need to interview, prospective, property managers. So I have all these, connections. But then, as I'm talking to a broker about a, 200 unit deal for, my day job, they're also feeding me, opportunities that are a 10 or a 20 unit.
That's right. Smaller,
property.
more properties that are more your size that CalCap wouldn't even want to spend their time on.
And then, also, developing a relationship with those brokers where they're hitting me up and saying, so Sharif, do you want to partner on this deal?
Right.
Is this something that, we could work on just because, they like me in my way?
I think it would almost be, if I may go so far as, just because, I'm a great believer in financial freedom, using real estate as your vehicle to get there, right? And so I'm a great believer in being able to understand that I can develop my own portfolio while I'm doing, right? Like I've worked with a lot of flippers who are like, oh yeah, I flip, this is really great. And then they start going, I'm tired. And I go, have you kept any of your flips yet? Have you started to develop your own passive stream of income to cultivate your own retirement, to cultivate your own future growth? And even your boss is, I think, saying the same thing. I think you mentioned even your boss is a little like, hey, have you thought about, right? So that you can stabilize yourself and create your own retirement plan. Mm-hmm. Using a vehicle that you love and are deeply knowledgeable. So all I can do is say, I think it would be irresponsible of you to not. I'm going to put you on the map. Now you can really blame me for this. You can tell your boss, Christina made me do it. Right? It's irresponsible of you to not think about, why would I not grow my own portfolio, grow my own retirement plan while I am a professional in this field?
Absolutely. A job is something that you show up to, you do a task, and you get paid for it. You don't show up to do that job and do the task, you will cease getting paid for it.
That's correct.
So the prudent thing to do, right, is to not invest your time and heart and passion, into the job solely. To invest your time and energy and passion into buying assets that can spit off a revenue stream, whether you show up in the office or not.
That's right. That's called retirement planning. It's called taking care of yourself and developing your financial leadership and your financial freedom. Okay, tell me about a deal that went right, and how did you and or CalCap set it up in such a way that it went right? Because it sounds like setting it up right is one of your expertise. Just laying trying to send you the shot so you can make the basket. Come on.
So speaking of shots, I'm thinking about another kind of a shot right now. I've been on the wagon now for a good month or so, but telling this story will make me want to pour a glass of bourbon.
No pouring a glass of bourbon. Just gonna have to tell us right now. How did it went? Now, tell me about a deal that went right. And then tell me about the deal that went wrong. So tell me about the right deal first.
So post-COVID, we had, us, like many sponsors, were pencils down. Mm-hmm. The bid-ask spread between buyers and sellers was too great, and nobody knew what the hell was going to happen to the economy. So we basically stopped underwriting deals. So we started thinking, out of the box, what are we going to do? So I started looking into, distress opportunities that never really happened. I started looking at various different conversion, opportunities. Student housing, hotels, into market rate. Started looking at, LIHTCs and going through the qualified contract process. Anything to try to source some deals that made some sense. Then when all the COVID money started to come out and real estate just went bonkers, pricing went really, really crazy. Then we started looking at doing some ground up development, like when the whole replacement cost. There wasn't a situation that was really, made sense. And so we started looking at doing some development. Anyway, so I got, cut my teeth into that. Really, really fun and interesting. Again, I talked about the whole tactile side. Oh my God, driving around an area and seeing a plot of dirt, 1-2 blocks off the main drag of, the city, the anchor city that I'm interested in. They had all these compelling,
Mhm.
retail, professional, educational, manufacturing, job kind of situation. I think,
Yep.
wow, I'm going to build something here. That was really, really, really exciting. But then, like, talking to civil engineers and architectural and environmental, and getting down to color palettes, for the paint scheme,
Yeah, right.
making submittals to the city. It was all really, really fun. Anyway, then there's a reordering of responsibilities at my company. And I was asked to get back into acquisitions.
Okay.
Like, okay, that's good. I like doing acquisitions. And I'd been off of the game, for a couple of years. So I was told to get back into acquisitions like 1 or 2 weeks, probably one, right before NMHC. So pounded the phones, set up meetings like crazy. Hey, Joe, it's been a couple of years, but I'm back in the acquisition game. Can't wait to get back out there. So lots of meetings, just a couple of drinks at the conference, and it's in Vegas. So did a whole bunch of that. I packed, a carry-on suitcase and some clothes for 3 days of conferencing, just like, Monday, Tuesday, Wednesday. But as things worked out positively, by Wednesday evening, I was flying to Little Rock, or excuse me, Kansas City. So wasn't dressed for it, wasn't prepared for it, whatever. By the way, anybody who's ever toured a property well dressed is not a good idea. You get more than a few disparaging remarks from the tenants, filled with usually a bunch of expletives. You're the blankety blankety blank that's going to buy this property, increase my rents. Anyway, so I started doing some property. The first property I saw was the deal that has not gone well.
Okay. The next question.
Anybody
deal that
who's
went
seen
wrong.
properties?
Yes, that's the next question. Tell me about a deal that went wrong. Right? And
So let me start with the one that went badly.
Okay.
And basically it was dirty. It was undermanaged. Did not have CapEx. Didn't have a maintenance technician. It was just one problem after the other. The next property I went to go see that same day was the one that we just closed. Beautiful property, up on a bluff, lots of green space, nice property, covered parking, but like with pitched roofs, some good renovations, 97, 98% occupancy while lifting rents, healthily. That deal went smooth as silk. The first one I saw, I remember coming back to home and telling investment committee, I saw it, and we had the term steaming pile. That's what it reminded me of. It was just a steaming pile of doo-doo.
Yeah, we call it the
and I said we should avoid it.
Yep. And I have a terminology from a previous experience of calling it a SHIT whole 5, because I looked at this portfolio that had 5 properties in it, and the guy who even showed me the property said, "Oh, you're going to see our SHIT 5," and I'm like, why are you telling me this before I even tour the properties, that this is your name for these 5 properties you're trying to sell me? Go ahead.
On the first one, so again, just like the red flags.
Right, red flags.
First one, when I'm at NMHC, I hear about this deal, but in the course of hearing about this deal, from the listing broker, I talked to a couple of other brokers who did a BOV on it, and they said, yeah, that the guy that got the listing, he bought the listing. In other words, he told the seller, I'm going to get you a price of something.
Right.
So I go in and see the property, toured it. Okay, great. I get back to the home office and advise everybody here, we don't want to go for it. Broker is burning up the phone lines, calling me, Sharif, come on. It was a good property. Yes, I know, lots of deferred, so forth and so on, but write me an offer. Just write me an offer. Like he was. So it's broker's job is to get, to throw chum in the water, to get as many bidders as possible. That makes them look great to the seller. Because the property did not show well, he was after me more than I was after him because he wasn't getting a whole bunch of offers. So did my underwrite, great basis. The opportunity to get the property at a great basis was there. I did see that there was a big, huge, loss to lease between, where they were at and where they could be, post renovation. It was in a part of Kansas City called Olathe. It's a somewhat, well-to-do suburb, $100,000 median incomes. One of the things I definitely look at is income to rent ratios. The income to rent ratios were like 9. Like
Okay.
fundamentals of like multifamily value add 101. If the income to rent ratio is 2.5 and the leasing office qualifies at 2.5, is that a place where you're going to put 10,000 per door and try to seek, a $250 renovation premium? No, it's not going to be affordable. But in a market where it's 9-1,
9-1, sure.
9-1.
Yeah.
Oh, and by the way, that property was 2 miles away from another one of our properties that we owned.
Okay.
So it's like I knew what kind of rents could be supported. So it's like, so did the underwrite, wrote an offer, and now the broker decides to play hard to get, pushing me for more money, yada yada. So we ended up doing an access agreement for so just for quick education. Typical process is maybe you've seen the property, maybe you haven't seen the property, write an LOI, back and forth. And then you go under, seller will accept, you go into contract, then you have say 21 days to do physical, due diligence. Then you release contingencies, go non-refundable, and close the deal. With this situation, we didn't want to go through the expense and the time of negotiating the whole PSA. So instead of doing the due diligence after PSA, we did it before the PSA. So we come up with an access agreement that tells us like what kind of units we can get into and my list of 20 some odd different items that I want to get to do the on-site. But then I'm on the horn to arrange for the contractors and the specialists to go and do the on-site physical DD. We're doing lease audits, all this stuff. Anyway, so we do all this stuff and deferred maintenance, roofing issues, driveway need to be replaced. The straw that broke the camel's back, though, was a weird little nuanced thing.
Okay.
It's detailed, having to do with fire panels. Again, I just want to educate people a little bit.
Sure.
So fire panels. So first of all, the property is tons of wood, the staircases, the balconies, tons of exterior wood. And they had these fire panels that were in like the basement laundry room. Now, you and I might think that if there was a fire and somebody, hits the pull station, that's going to go to the fire panel. And then it's going to start doing, an audible alarm and a strobe light and like a phone call
to the police.
Either one or more of, say, the community manager at 2 o'clock in the morning, the maintenance people, and or the fire department. It didn't do all that. Instead, it was only designed to do an alarm and the strobe light, but no calls. If the property was built now, it would have to be up to code, that it would call people and call the fire department. Here's a little trick. If those fire panels ever had to be replaced, in other words, a fire panel went bad, then the whole property needed to be brought up to code. So then I'm on the phone with the fire department to figure out exactly what is the code. Then I'm on the phone to various vendors to figure out the cost of getting these fire panels replaced.
All the fire panels up to code.
Systems.
Yeah, the whole system.
Got 3 different quotes.
Yeah.
And the price, like you could drive a oil tanker through, like the range of high to low.
Oh,
of course, some of those vendors were doing like a low price, just trying to buy the business. Anyway, so we had this huge ambiguity. So then I go back to the seller, trying to get a little bit of haircut. Anyway, so to talk numbers, 11,150,000, and I said, you know what, can we get it for 11? And they're like, no, we have all these other bidders. We have all these other people who are, we're talking to, they want to take a run at the deal. I'm like,
Interesting.
Listen, we need $150,000 haircut when our likely risk is somewhere between 250 and $1 million based on the vendors we've been talking to.
Right. And we're asking for
so ultimately we agreed to disagree.
Okay.
And then the broker calls me back a month later, like last week, saying,
hey,
those other people that I thought were going to come through, they didn't. Where are you guys at? Okay. Well, you guys didn't want it at 11. Give me an updated rent roll. Give me updated financials. I just finally got an insurance quote from my broker because there's some ambiguities. Like the guy couldn't even give me proper loss runs. And then we got updated debt quotes.
Mm-hmm.
So meanwhile, the debt capital market side got funky. So spreads widened. Yeah. Meanwhile, 10-year rates, went up a lot. Meanwhile, latest T12 showed revenue going down because the property was a shit show.
Right. And people are walking through that they're selling the property and tenants are leaving going, you're going to sell the property and they're going to raise my rent. So I'm leaving.
But my debt proceeds went down $1 million because the revenue side on the financials were going down. Right. Revenue side was going down and my debt cost was going up. So proceeds in order to hit a DSCR was going down. So I went back to the broker. I'm like, dude, you could have sold this to me at 11.
Now
where we're at now? Now we're at 10.
I was going to say, now we're at 10. We're at 9, 5, or 10 because we've just
lost. Then what does he do? Then what does he do? Well, if you can't get the 10-8, he's like, I've got guys at 10-8. Like, really?
Go for it.
We're going to do this again.
Yeah, I'm not gonna do this dance with you. Take your guys at 10-8. Goodbye.
Right. So that was the deal that was not good. Could have been a lot worse, though, I think. So on let's just say it was $11 million acquisition, we're at a $2 million CapEx budget, where over 50% of that was done with deferred. That's not value add stuff. That's where the community manager is managing, contractors and so forth, going in and out of the property and disrupting and fixing stuff, as opposed to tenant satisfaction, leasing new units, so forth and so on. Welcoming, prospective tenants. So there's a whole brain damage part of that, and we spent, probably $50,000 worth of various due diligence and, costs and so forth to run after the deal, but it didn't work out. But it could have been, worse. And, internally, we're now targeting to pick it up for under 10 million, next time.
Yeah. Next time he comes back, because the real world will show his bluff and he won't have a buyer. And he still has a seller looking to sell. So he'll call you back and go, so what about now? And you're like, well, now we still got to go back through income and, interest rates and debt coverage ratio. And what can we now give you based on the fact that we want to get loans? All right. Fun story. Thank you very much. Last question. What does financial freedom mean to you? Why are you working so hard in a market, in an industry that is hard and great and fun and difficult and all of these things? What is financial freedom to you? Why are you facing this?
Why am I facing this? Why am I into this business? Why
are you into this business? But obviously, generally, the answer as to why you're in it is some version of what financial freedom means. So you tell me, why are you in this business? Does it have anything to do with financial freedom?
And a beautiful thing about this business is that you really do have the opportunity to be as active as you want or as passive as you want. One could be very, very active and hunt down deals and negotiate with brokers and sellers and do the on-site DD in 110 degrees in Las Vegas or whatever. Yeah. I was actually looking at Kansas City. It was 101 over there with far more humidity than us in LA ever have to suffer.
Right.
And then, one could build a portfolio third party manage, and take off for a while and manage it, virtually remotely. I happen to love Mexico City, and I could manage a portfolio from Mexico City.
Yeah, you could.
While being able to get from Mexico City to all these markets, in a quick, airplane ride. So again, one could be very, very active or passive as much as they want. And that is what I'd call freedom.
Beautiful. Beautiful description. Thank you so much, Sharif, for being on the show. Thank you for helping us walk through your mind, your thinking.
Kicking me in the butt. Encourage me.
That's right. That's right. I think I'm going to hold by that. Like, what's our job? Our job in life is to be able to build today and tomorrow and build our financial leadership. In my mind, that is the message I put out over and over and over again. Financial leadership starts with you. Your financial freedom anchors with you. Your choices anchor with you. So therefore, if that is your charge, then yes, do the job you're doing and accept your boss mentorship and having a building and look at doing joint GPs with other people. Create your private portfolio for yourself that helps you to build your retirement. People invest in their 401k. Why would you not invest in a small building? Yeah. All right. This is Christina Suter on the ChristinaSuter.com is where you can find me, Instagram, Twitter, and a variety of other places. Thank you so much, Sharif. Wonderful to have you on the show.